Welcome to the 2024 Quick Commerce Championship. Entering the ring first is the defending champion with a market cap of more than 2 trillion rupees. Already an investor's favorite, Zomato from Gurgaon.
And on the other side, here to win back the trophy, the OG quick commerce giant, a trailblazer in the grocery delivery space, and soon to hit the stock market, Swiggy. Okay, so I'm sure you figured out by now that neither Snigdha nor I know very much about wrestling. But with Swiggy set to go public soon, the quick commerce space in India is starting to look more and more like a wrestling match. Hence the slightly indulgent introduction to this episode. Now, going head to head against Swiggy is the only listed quick commerce platform in the country. Its arch rival, Zomato.
And like every great wrestler, Swiggy has the ultimate backstory. It started out as a trailblazer in the food tech space. In fact, it was the one that actually got the ball rolling both in food delivery and in grocery delivery. Zomato, meanwhile, was still mostly about restaurant reviews back then. It was only in 2015 when Swiggy started seeing massive success that Zomato launched food delivery. And ever since, you could say Zomato has been mirroring Swiggy.
So Swiggy started Instamart, Zomato acquired Grofers and turned it into Blinkit. Basically, both companies are doing exactly the same thing, but somehow Zomato managed to leave Swiggy far behind. Swiggy's market share has dropped considerably in the last few years, both in quick commerce and food delivery. Now, not only is Zomato listed, its share prices have been going through the roof, and Blinkit has become the jewel in its crown.
And to add to Swiggy's woes, the market is not as empathetic as it was 3 years ago when Zomato went public. Back then, investors took a little more kindly to companies that had not shown profitability. That is not the case anymore. So why then is Swiggy going public now? And by any chance, could Zomato's success on the bourses actually work in Swiggy's favor or not?
To find out and to give us a ringside view of what wouldn't be a stretch to call a landmark moment in India's booming quick commerce space, we have the Ken's deputy editor, Seetharaman.
Hello and welcome to another special episode of Daybreak. I'm Snigdha.
And I'm Rahel, and every week we come together to talk about something in business and tech that interests the both of us.
And it won't just be us. Depending on what we're talking about, we will bring a bunch of really interesting people onto the podcast. Today is Friday, the 19th of July.
So, Seetha, between 3 years ago when Zomato went public and now, can you tell us what's changed for both companies, for Swiggy and for Zomato?
I think a lot has changed. One, I think the businesses have headed in different different directions. Um, and how investors and consumers perceive them. That has also changed dramatically, and that is obviously linked to how they have fared. When Zomato went public, it listed at a premium, and then the stock plunged below $50 a share, and then it bounced back quite spectacularly. This is all thanks to the unexpected and glorious rise of Blinkit, which I think, it's surprising because when Zomato acquired Blinkit, not too many people were actually happy with it. Blinkit was almost dead then. Zomato threw the company a lifeline, I think gave it some cash and then decided to acquire it. Swiggy, we all know Swiggy was the first, among the two, was the first to launch, food delivery. And Zomato was basically a restaurant discovery platform It's older than Swiggy, but it's after Swiggy's entry into the space that Zomato also decided to, get in. And Swiggy for a long time was the larger of the two. I think pre-pandemic, Swiggy's market share in food delivery was roughly about 55%. But now it's Zomato which has 55%, right? And Instamart had a massive head start on Blinkit in grocery, right? But Blinkit has become the largest, right? So much so that even in Swiggy's backyard, which is Bangalore, Blinkit is larger than Instamart.
Yeah, I remember even Dipinder Goyal himself had announced a couple of months ago, right, that Blinkit would be bigger than Zomato. And talking about founders, Sita, can you tell us a little bit about these two founders, Sriharsha Manjeti from Swiggy and Dipinder Goyal from Zomato? How does their public image make a difference to how we perceive these companies?
I think Dipinder is a very, very public founder. He's on Twitter all the time now. He has a podcast as well, I think, where he talks to restaurant owners and chefs, I think, right? So the way he communicates with investors and Zomato users, I think that's also helped Zomato the past 3-4 years. It's hard to quantify. It's almost impossible to quantify. But it certainly helped.
Right. And this is a company that's always done things differently, right? Even when you look back at, when Zomato went public, it said it wouldn't do quarterly analyst calls.
Yeah, a lot of analysts were actually quite angry about it because Zomato essentially said that it was just going to put out this note with questions that they thought people might want to ask them, like FAQs.
Yeah, I think we'll ask the questions and we'll answer them ourselves, right? Which is very, very unusual. Okay. Almost all major listed companies do quarterly earnings calls. Okay. Which is where analysts sort of try and sort of understand the nitty-gritty of the company.
Right.
Zomato didn't want to do that, which was a problem because Zomato was the first, sort of tech startup to go public, right, in 2021. And very few public market investors and analysts actually understood the internet economy. So, I mean, I've written a few pieces arguing how, if anything, Zomato should have engaged more, not less, than a typical listed company, right? But they've fixed that. Now they do hold quarterly calls, right? And in addition to that, Dipinder talking about, say, a new, sort of feature that they've launched, right? Responding to consumers on Twitter. That certainly helped. And Sriharsha, is nowhere near as sort of available on social media. Right. So that sort of, you've seen a lot of, customer complaints on social, right? I'm not saying it's necessary for a founder to address those questions, but in this case, you have two founders, one is very public, the other is anything but.
Yeah, and he's always responding to so many of these complaints, right? Like Dipinder. So that makes it all the more stark that, the other founder's not that engaging at that level.
I don't think it's a strategy at all. I think it's a function maybe of the person Sriharsha is, maybe he's not comfortable responding to, 30, consumers every day, right? But you have to remember, we're talking about how this has helped Zomato only because Zomato's numbers look very good, right? If Zomato wasn't growing, if the stock wasn't doing well, we would be, maybe slamming Dipinder for doing all that when his company was not doing well, right? Yeah. So, which is why, I'm not saying I think it's just, the people that they are. And here it certainly helped. I think in Zomato's case, what's also important is, Zomato went public, then came Policy Bazaar, then Nykaa, then Paytm. And a lot of individual investors who had never, ever invested in stocks directly, applied for Zomato shares in the IPO, right? And that was a function of the rise in the number of individual investors trading in stocks, right? And until then, people didn't really bother, but then they realized here's a company that I use every other day that's going public now. So why don't I get a piece of that? I do like the company, right? I know all my friends are using it. I don't, even if I don't understand the fundamentals of a stock, I know that a lot of people use this company, right?
Yeah, and exactly that's what happened with Nykaa as well, right? When you have a
Exactly.
solid story, you're
Yeah.
immediately, you want
Yeah.
to kind of buy
Yeah.
into that. Right. So, Sita, a little while ago, you spoke about investor perception. I'm interested to know how differently investors are likely to look at Swiggy now than they looked at Zomato 3 years ago, right? Especially when it comes to things like profitability. We know that Swiggy isn't there yet. Do you think that matters to investors this time around?
You have to remember that Indian public market investors are very, very particular about profitability. Okay. You know, in the US, you've had, you had Amazon going public in the mid 90s, and it was loss making for, I think, 15 years, right? It kept telling investors, we're going to lose money for another 5 years, but we're going to focus on growth, right? And investors sort of bought that story, right? Whereas here, we're all about profitability, right? Even how you value a company is actually based on the profits that a company makes, right? So when Zomato and Nykaa and all went public, I'm sure, it must have been very difficult for Zomato's investment bankers to actually convince a lot of people that they should invest in Zomato, even if Zomato wasn't profitable, right? So the pitch would have been, don't worry, we're not profitable right now, but we're going to be in a year, right? Without that, I don't think anyone would have, invested. So they've seen that these companies were not making money when they went public, but over time they did, right? But the problem here is, if Swiggy decides to list, before turning a profit, the problem is, investors will say, you two are in the same businesses, food delivery, restaurant booking, restaurant discovery and booking, and quick commerce, right? And Zomato actually turned a profit, 3 or 4 quarters ago? It was not a lot, right? Just single digits. So why are you 4 or 5 quarters behind Zomato? But one investor did tell me that it shouldn't be a deal breaker as long as Swiggy says, okay, listen, just 3 quarters. Okay, look at our trajectory. We will be in the black very soon. I mean, the fact that it was operating in a duopoly market. Okay, so there was no question of another player coming in, right? If you remember, a decade ago, there were about 6-7 players. There was Food Panda, there was Ola, there was Uber Eats, right? Then some exited, some were acquired. Then it became very clear. Amazon also, I think, had a pilot in Bangalore. I don't think, I think it was dead on arrival. So it became very clear that there are only going to be 2 players in this market.
It's so
Right?
funny that you said Food Panda because for a second I was like, wait, what? That was a thing too. It's completely
yeah.
So
blank.
long ago.
Yeah. So I think that is something that, so even if I know that you're bleeding right now, I know that you will eventually make money because customers have just these 2 companies to turn to whenever they want to order food, right? You don't come across too many industries where there are just 2 companies, right? But in hindsight, now we're not even talking about food delivery. No one talks about food delivery when they talk about Zomato.
Yeah.
So, which is strange.
I'm excited to be back in the studio.
Yeah, I'm excited too, but actually kind of nervous. Okay, fine, let's do it.
Hi, I'm Rohin Dharmakumar and I'm here with my colleague and co-host Praveen Gopal Krishnan.
Hello.
And we're the co-hosts of a brand new weekly business podcast from the Ken called 2x2. Yup, like a 2x2 matrix.
Totally unrelated, but we are also both MBAs. But a little more relevant is the fact that we are actually business journalists first. So, the way this podcast started is that Rohin and I kept having all of these conversations about business. We kept talking about people, companies, and I'm really not kidding. So, whenever we would do this, we had tons of ideas and we had questions and patterns. And after some time, we just started thinking, why is no one else talking about it?
I'm going to give you an example. We've been talking about Walmart's two, adopted children, PhonePe and Flipkart, and how they're making some big strides in new markets. But importantly, in each other's markets. Flipkart has built a UPI app and PhonePe has built a grocery delivery app. It's kind of like both of them are giant ships silently straying from their courses, and we wanted to find out at what point might they collide.
There are several stories like this, like why has all the meaning gone out of work, or whether Zomato is overvalued, and which VCs have burnt money the most effectively. And because we are MBAs, we kept putting them into a 2x2 matrix, because that's really the simplest way to describe trade-offs, incentives, and outcomes.
With this podcast, we actually want to break all the rules. There is no script, no explainers, no answers, only pressing questions, hidden connections, and unexpected predictions.
And it's not just us. Every episode is going to have diverse and sharp guests and experts who not just raise questions about the biggest companies, people, and trends, but also help us get some answers.
We are incredibly excited for 2x2, our first premium subscriber-only podcast from the kin. But hey, here's the thing. Our first full episode is now out for free. We discuss the tussle between PhonePe and Flipkart, why one of them may have an advantage over the other, and where Walmart really wants them both to end up. You can find it anywhere you get your podcasts. There are links in the bio, or just type 2x2. That's TWO by TWO in your search bar and you'll find it.
We publish every single Thursday morning with a business story that we think is both interesting, pressing, and also a little exciting. That's at least what we are trying to do and our promise. All right, now back to Snigdha and Rahel.
Seetha, what is it that Swiggy seems to be getting so wrong, because right now, yes, in comparison to Zomato and its exponential rise, it is looking like the underdog, but then again, the duopoly still exists, right? At least in the food delivery side, it does. So, yeah, what is Swiggy not getting right?
Yeah, so like I said, food delivery sort of dominated the conversation when Zomato listed, but no one really cares for it now. Not because it's not important, it's just that it's not the kind of business that will grow at 30-40%, right? And investors want high growth businesses, right? So they already know that there are only two players in food delivery, and the market will grow at 10%, 12%, whatever, right? So the conversation has shifted to quick commerce, and
Right.
this you can see in the kind of questions analysts ask Zomato every quarter. For every 3 or 4 questions on Blinkit, there is one on food delivery, right? And Instamart is where I think Swiggy could have done a lot more. I'll just give you an example. Instamart was launched before Zepto.
Yeah.
I think in 2020. And Zepto was in 2021, and Blinkit was then Grofers. It was floundering. It had gone through multiple pivots. It was not really a serious player. So Instamart said, listen, it's going to be, 20, 30 minute delivery, right? Then came Zepto and said 10 minutes. Well, Instamart said, no, that's nonsense. We're still going to do 30 minutes, right? At that point, it seemed to me that Instamart was the smartest one in the room, because it sort of, I thought everyone thought that 10-minute delivery was a fad, right? and obviously people didn't want to wait until the following day for their delivery, but they surely didn't want it in 10 minutes, right? So I thought Instamart was being really smart by sticking to its 30-minute, 20, 30, 45-minute promise, right? It stayed on that path. Then came Blinkit and took 10-minute delivery mainstream, right? Then I think it was a lot of catching up to do for Instamart.
Right. So basically, despite being first to the quick commerce game, somewhere along the way, Swiggy seems to have fallen behind.
Yeah.
This actually reminds me of this edition of Nutgraph from quite recently. For our listeners who aren't familiar with Nutgraph, it's the Ken's most popular newsletter. It's written by Praveen Gopal Krishnan, the Ken's COO. So PGK wrote about how technically, in many ways, Swiggy has certain structural advantages that Zomato doesn't. And what he was referring to with that is that Swiggy, unlike Zomato, offers both food delivery and grocery delivery on the same app,
Yeah.
which in many ways should technically work out well for Swiggy, right? Because it does allow for certain efficiencies, especially since both groceries and food deliveries share the same delivery fleet. So it should help Swiggy create certain optimizations.
Yeah, but it's clearly not working, right?
Yeah, exactly.
I mean, maybe Swiggy hoped it would, but it isn't. And for a lot of people, actually going to the app and having to pick between food delivery, Instamart, Swiggy Mini,
Yeah.
Dine Out, there are so many things. It's just too much stuff in one place. So, yeah, you're right. It is easier to find Blinkit separately or Zomato separately on your phone. Uh, anyway, talking about how these apps are designed, can we talk a little bit about innovation at Swiggy, Sita? Because we also did an episode of this on Daybreak, and also there was a story on the Ken about this, about how Swiggy has always been known for its innovation. And now, because of the fact that it's chasing profitability, and of course that is very important, innovation has kind of taken a backseat, right? There's a lot of pressure on employees. Like lots of things have shut down, like Swiggy Meet, Swiggy Daily. All of Handpicked is also gone. So, what does this mean for Swiggy's IPO? Like, my question is, how will investors be looking at all of this? Does it even matter to them? Innovation in a company, I mean, does it affect investors in any way?
I've never heard anyone talk about innovation, right, on earnings calls. It doesn't honestly matter to them if you have 10 projects, going at the same time, as long as you're not spending $300 million on them. Right? They don't care you can have as many projects as you want, right? But how are your top 3, 4 verticals doing? That's what
Right.
matters, right? And I mean, there is this sort of, there will be questions around, do you folks really want to sort of waste your resources on so many tiny things, right? Wouldn't all these people be put, do you not want to put them to better use in your food delivery or your quick commerce vertical, right? Beyond that, I don't think they care. I think Zomato got into logistics. I think they, so I mean, it's very small. As long as, it's not, it doesn't cost a lot of money, they don't really care.
I want to flip that argument a bit and tell me if this is a possibility at all, Sita. Zomato's been doing really, really well. Could that potentially end up working in Swiggy's favor? Because sure, Swiggy isn't doing as well right now, but at least thanks to Zomato, investors know that this is a business model that works, right? These two companies are doing exactly the same thing at the end of the day.
Yeah, certainly. Swiggy doesn't have to spend hours explaining the economics of food delivery and quick commerce, right? Swiggy just needs to say, hey, listen, these are our numbers, and in 3 or 4 months, we will reach this particular point, right? So all investors need to do is go and see what, say, Blinkit's journey was, and that's enough, right? They don't have to educate investors about food delivery or quick commerce. But then you also get assessed every quarter relative to Zomato, right? So you may be doing well, you may be growing at 20%, but then they'll say, listen, Zomato is growing at 35%, what gives?
So Zomato is that Sharma ji ka beta
Absolutely.
syndrome is going to
Absolutely.
happen big time for
Right.
Swiggy.
I couldn't have phrased it better.
So, Sita, apart from this, are there any other ways in which investors benefit when two companies mirror each other?
It helps a lot because you have these two companies which are almost identical to each other. Food delivery, restaurant discovery, quick commerce, right? Zomato has Hyperpure, which is basically supplying, staples and fruit and vegetables to restaurants. That's a business that Swiggy doesn't have. And Swiggy has one or two things which Zomato doesn't have, right? But overall, I mean, like broadly speaking, these are identical companies. And you don't get too many such companies in the listed space, especially if you take FMCG companies, you have a company which is heavy on foods, right? Almost entirely foods, like Tata Consumer, right? Then you have a company which is big on, say, personal care, which is like Marico, right? Then you have a company which is a mix of personal care, home care, foods, which is Hindustan Unilever, right? So it becomes a bit hard, to compare these companies. Here, that's not a problem at all, right? So, so it becomes much, much easier to assess these companies, compare them. So one's valuation will obviously have an impact on the others.
Got it. So, is this what you mean when you say like the public market is relative, or that's a completely different
Absolutely.
thing?
No, absolutely. So yeah. So it's way more relative than private markets. When when Zomato and Swiggy were unlisted, I'm sure like anyone who wanted to invest in any venture capitalist that wanted to invest in Swiggy would obviously look at Zomato's last fundraise and what their valuation was, and then decide what kind of value to assign Swiggy. But you never had the kind of numbers, granular numbers that you have for a listed company. Right. So it's very, very relative, and it's every 3 months, right? So it's, so it has to be relative.
All right. So, Sita, let's imagine a future, when Swiggy has gone for its IPO, and let's assume that Zomato shares are still doing as well as they are right now. How will that affect Swiggy's initial offer price? Will Swiggy have to offer extra discount on it because Zomato is doing so well?
See, as long as the bull run continues, I think there will be takers for all kinds of companies. Okay. So no one needs to worry about their sort of, not having enough investors, right, subscribe to their issue. The point is whether or not, I mean, it's very clear at this point it's going to be at a discount to Zomato. What I mean by that is, analysts use different metrics to value companies, right? So if Zomato is sort of valued at, say, 10x on a particular metric, then Zomato will have to offer its shares at maybe like 7x or 8x, right? Simply because I don't think Instamart has been able to match Blinkit's growth, right? So, a discount to Zomato's price, I think, is a given at this point.
Okay, so Sita, then the obvious next question is why now, right? Why did Swiggy not choose to maybe wait another year or wait a while before it got like all its businesses in order, where profitability, it was closer to profitability? Why do you think it chose to, why is it doing all of this now?
Can I just add my question to this? Why not earlier also, right? Like when things were still looking good and profitability was not such a, such an important thing for investors. Like could have done it
when
earlier.
Swiggy was still number one back in, there was a point where it was doing much better.
Yeah, I mean, I wish I had the answer to this. I think it's a function of what not just Swiggy wants, but also what its investors are comfortable with, right? Maybe Zomato's investors thought 2021 was the right time for the company to go public. And Swiggy's investors felt there was no need for the company to go public because you have to understand there is a lot of scrutiny, Okay, do you really want to take questions every 3 months? Do you really want to notify the stock exchanges about every little rumor that comes out? Right? There is a lot of pressure. So it's not, being listed is not for the faint of heart. So, so do you really want to do it? So maybe Swiggy thought 2024 was the right time to do it. And yeah, I mean, I don't know if they can. What if they wait and the tide turns in the market, right? And no one is interested in IPOs, right? So then they'll have to think about an even bigger discount.
Sita, before you leave, we have this thing where we ask our guests for a recommendation, whether it's a movie, a book,
Okay.
even a song, actually. Anything that you have to recommend.
Yeah, actually, I read, Salman Rushdie's most recent memoir, Knife.
Oh, yeah. The one about the attack.
Yeah, it's yeah. I mean, I read that right after his first memoir, Joseph Anton. So it's quite something, And then I decided to reread some of his earlier work. So I'm currently on Harun and the Sea of Stories.
Oh, that's one of my favorites, Salman Rushdie books.
Yeah, beautiful. I mean, Knife is absolutely, it's a very short book, unlike Joseph Anton, but it's worth it.
Yeah, and I love the cover. It's like both ways, no?
Yeah, the cover is brilliant.
From both sides, yeah. I don't know, is there a word for it, for those kind of books that you can flip and read, like,
Either way.
Yeah.
No, is it like that? I don't think. I mean, I actually read it on the
one that
Kindle, so I don't know.
Okay,
So
okay.
cool.
Anyway, thank you so much, Sita, for
Thank
you,
giving
Sita.
us your time. Daybreak is produced from the newsroom of The Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings.
A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. Head to theken.com and click on the red subscribe button on the top of the Ken website.
Today's episode was hosted and produced by Rahel Philippos and I, Snigdha Sharma, and it was edited by Rajiv Sien. Also, a huge shout out to Aditi and Kavipriya and the rest of our fantastic design team here at The Ken for the amazing artwork that they make for every Friday special episode of Daybreak.